Preparing for a corporate FP&A at PwC interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. How would you explain the role of corporate FP&A? Corporate FP&A translates business activity into financial insight. I would support budgeting, rolling forecasts, management reporting, variance analysis, and scenario planning, while challenging assumptions constructively. The most valuable contribution is not simply producing numbers, it is explaining what changed, why it changed, and what management should do next. In a managed services environment, I would combine consistent processes and controls with enough business understanding to deliver reliable, decision-ready information for the client. While answering, focus on planning, forecasting, performance analysis, management reporting, decision support, business partnering, and how FP&A connects operational drivers with financial outcomes. Question 2. Walk me through your approach to preparing an annual budget. I begin by confirming the planning calendar, scope, templates, and ownership. Then I establish a historical baseline and build the budget from operational drivers such as headcount, volume, pricing, utilization, and vendor costs. I meet stakeholders to understand assumptions, challenge inconsistencies, and document agreed changes. After consolidating submissions, I perform reasonableness checks, prepare management outputs, incorporate review feedback, and secure formal approval. Strong documentation ensures the final budget remains an effective benchmark. Make sure to cover the planning calendar, historical baseline, operational drivers, stakeholder assumptions, challenge process, consolidation, review cycles, approvals, and documentation of changes. Question 3. How do you build a reliable rolling forecast? A reliable rolling forecast combines actual results with forward-looking operational drivers. I would refresh the model using actual-to-date data, retain the required forecast horizon, and update assumptions for volume, pricing, labor, projects, and one-time items. Each major assumption should have a business owner and clear support. I would compare prior forecasts with actual outcomes, investigate bias or recurring errors, and refine the model. This creates a disciplined feedback loop rather than a monthly reforecast exercise. In your answer, talk about forecast horizon, driver-based modeling, actual-to-date updates, assumption ownership, forecast accuracy, scenario analysis, cadence, and continuous improvement using variance outcomes. Question 4. How would you investigate a significant budget to actual variance? I first validate that the variance is real by checking mappings, period cutoffs, accruals, and source data. Then I decompose it into timing, volume, price, mix, foreign exchange, rate, and one-off effects. I speak with the responsible business owner to confirm the operational story and assess whether the impact is temporary or structural. Finally, I quantify the forecast implication, document root cause, and recommend an action or assumption change rather than merely reporting the variance. Be sure to mention materiality, timing versus permanent differences, price-volume mix analysis, accounting accuracy, business owner discussions, root cause, corrective action, and communication of implications. Question 5. What is driver-based planning, and when would you use it? Driver-based planning models financial results through the operational factors that cause them. For example, revenue may depend on customers, units, price, and retention, while payroll may depend on headcount, hiring dates, salaries, and bonus rates. I use it when those relationships are stable enough to improve forecast quality and accountability. It is more transparent than applying a blanket growth rate, although I would avoid excessive complexity and focus on drivers that materially influence decisions. Focus on linking financial outcomes to measurable operational drivers, selecting material drivers, using rates and volumes, improving transparency, avoiding unsupported detail, and distinguishing driver-based from purely historical forecasting. Question 6. How do you prepare an executive management pack? I start with the decisions the audience needs to make, then select a focused set of financial and operational KPIs. The pack should show actuals, budget, forecast, trends, and material variances, supported by concise commentary explaining drivers and actions. I use consistent definitions, clear visuals, and an executive summary that highlights risks, opportunities, and decisions required. Before distribution, I reconcile totals, check period labels, and confirm that the narrative agrees with the underlying data. In your answer, cover audience needs, concise KPI selection, actual versus planned trends, commentary, visualization, key risks, actions, consistency, and tailoring detail without overwhelming senior stakeholders. Question 7. Which KPIs would you use to assess corporate performance? The right KPIs depend on the business model and strategy. Common measures include revenue growth, gross margin, EBITDA, operating cash flow, working capital, headcount, utilization, customer retention, pipeline conversion, and forecast accuracy. I would distinguish lagging financial outcomes from leading operational indicators and define each metric consistently. A KPI is useful only when an owner understands the driver and can take action. I would therefore prioritize a concise dashboard over a long, unfocused list. Make sure to discuss selecting KPIs by business model, combining financial and operational measures, definitions, ownership, trend analysis, leading indicators, and avoiding metrics that do not support management decisions. Question 8. Describe how you would perform a headcount and personnel cost forecast. I would begin with the approved organizational structure and opening employee roster, then model hires, vacancies, transfers, departures, salary changes, bonuses, benefits, and employer taxes by month. Timing matters because a hire starting in October should not create a full-year cost. I would reconcile the forecast to payroll and the general ledger, investigate differences, and obtain business owner confirmation for open positions. This approach produces a more credible workforce plan than applying a percentage increase to prior year payroll. Focus on employee-level data, opening headcount, hires, departures, vacancies, compensation, benefits, bonuses, timing, organizational ownership, and reconciliation to payroll or the general ledger. Question 9. How would you improve a manual FP&A reporting process? I would map the current process from source data through final distribution, identifying repeated manual work, error points, and unclear ownership. Then I would standardize definitions and templates before automating data extraction, transformations, reconciliations, or recurring report production. Controls should include access management, validation checks, exception reporting, version control, and review sign-offs. I would test the solution against prior periods, document procedures, train users, and measure benefits such as cycle time, accuracy, and reduced rework. Be sure to mention process mapping, pain point diagnosis, standardization, data source assessment, automation, control design, testing, documentation, user adoption, and measuring time are quality improvements. Question 10. What controls are important in an FP&A managed services process? Important controls protect the integrity, confidentiality, and repeatability of the process. I would use controlled templates, restricted access, source-to-report reconciliations, completeness checks, standardized mappings, version control, documented reviewer sign-off, and change logs for key assumptions. Where possible, preparation and review should be separated. I would also maintain an issue log with owners and due dates. In managed services, consistent evidence is especially important because the team must demonstrate quality across recurring client deliverables. In your answer, cover data completeness, reconciliations, access controls, version management, review evidence, segregation of duties, change logs, standardized definitions, and escalation of unresolved exceptions. Question 11. How do you ensure data quality when combining multiple reporting sources? I first understand each source system, its grain, refresh timing, definitions, and limitations. I create a controlled mapping between fields, entities, accounts, departments, currencies, and reporting periods. Validation checks should identify missing records, duplicates, unexpected movements, and unmapped items. I reconcile key totals to the general ledger or approved source, investigate exceptions with owners, and retain evidence. These steps prevent a polished dashboard from masking inconsistent underlying data or incompatible business definitions. Focus on source system understanding, field mapping, data completeness, duplicate detection, period and currency consistency, reconciliation to the ledger, exception handling, and ownership of master data. Question 12. Tell me about a time you had to challenge a stakeholder's forecast assumption. In one forecast cycle, a stakeholder assumed a full-year benefit from a cost initiative that would not begin until the third quarter. I reviewed the implementation timeline, modeled the monthly phasing, and showed the difference between the original assumption and a realistic ramp-up. I listened to the operational constraints, then agreed a base case and an upside scenario rather than simply rejecting the estimate. The final forecast was more credible, and the stakeholder appreciated the transparent, evidence-based discussion. While answering, emphasize respectful challenge, evidence, sensitivity analysis, stakeholder context, alternative assumptions, resolution, and how you preserve the relationship while improving forecast credibility. Question 13. How would you manage competing deadlines from several clients or internal stakeholders? I would list each deliverable, deadline, dependency, effort, and consequence of delay, then prioritize regulatory, executive, and client-critical work first. I would confirm expectations early, identify conflicts, and propose realistic sequencing rather than silently accepting every request. Where appropriate, I would delegate defined tasks, use standard templates, and schedule review time before submission. If capacity remains constrained, I would escalate promptly with options. Clear communication protects both service quality and stakeholder confidence. Make sure to cover prioritization by risk and deadline, service level commitments, dependency mapping, capacity planning, early communication, delegation, escalation, and maintaining quality under pressure. Question 14. What does excellent client service mean in a PwC managed services role? Excellent client service means delivering accurate work on time while understanding how the output supports the client's decisions and broader objectives. I would clarify requirements, communicate risks early, provide practical recommendations, and maintain professional skepticism when data or assumptions appear inconsistent. In managed services, reliability and continuity matter, but I would also look for process improvements that reduce client effort or improve insight. The goal is to become a trusted extension of the client's finance team, not just a report producer. In your answer, discuss understanding the client's objectives, dependable delivery, proactive communication, commercial awareness, quality, continuous improvement, professional skepticism, and creating value beyond task completion. Question 15. How do you review work prepared by a junior team member? I begin by confirming the purpose, scope, and expected output so my review is risk-focused. I check formulas, links, source data, reconciliations, period comparisons, assumptions, and whether the commentary explains the numbers. I also assess documentation and whether another person could reproduce the work. I record clear review notes, discuss the reasoning with the preparer, and explain recurring issues so capability improves. A good review protects quality while developing the team member's judgment and ownership. Be sure to mention understanding the objective, checking logic and completeness, reconciling outputs, testing assumptions, reviewing documentation, giving constructive feedback, and coaching without taking ownership away from the preparer. Question 16. How would you explain a complex financial result to a non-finance executive? I would lead with the conclusion, quantify the impact, and explain the operational driver in plain language. For example, rather than saying margin declined because of unfavorable mix, I would explain that lower margin service volumes grew faster than premium services, reducing margin by 2 percentage points. I would separate facts from assumptions, highlight whether the issue is temporary or structural, and finish with the decision or action required. The explanation should help the executive act, not admire the analysis. Focus on starting with the business conclusion, using plain language, quantifying the impact, connecting financial results to operational drivers, avoiding jargon, and confirming the audience understands the required action. Question 17. How do you assess forecast accuracy and improve it over time? I would measure forecast accuracy by comparing forecasts with actual results at consistent horizons, using metrics such as absolute variance, percentage error, and bias. I would analyze errors by account, department, driver, and forecast cycle to distinguish random noise from systematic optimism or timing issues. Material recurring errors should lead to revised assumptions, better phasing, improved data, or stronger owner review. I would share the findings transparently, because forecast accuracy improves when accountability is paired with learning rather than blame. Make sure to cover defined accuracy metrics, forecast horizons, bias, materiality, driver-level analysis, recurring errors, business owner accountability, and changes to assumptions or process based on observed performance. Question 18. Describe a scenario analysis you would prepare for management. Suppose management is considering a hiring plan to support growth. I would build a base case using approved hiring dates, expected revenue conversion, salary costs, and productivity assumptions. I would add downside and upside cases for delayed demand, slower hiring, or stronger utilization, then show effects on revenue, EBITDA, cash flow, and capacity. I would highlight the most sensitive drivers and operational constraints, quantify the break-even point, and recommend trigger-based actions rather than presenting scenarios without a decision framework. In your answer, cover the decision being evaluated, base case assumptions, upside and downside cases, key sensitivities, operational feasibility, financial impact, probability or risks, and recommendation. Question 19. How would you handle an urgent request for an analysis when the data is incomplete? I would first clarify the decision, required level of precision, deadline, and minimum information needed. If data is incomplete, I would use the most reliable available sources, state limitations clearly, and create transparent assumptions or ranges rather than implying false accuracy. I would validate the most material inputs with the relevant owner and label the output as preliminary. After the urgent decision, I would complete the analysis, reconcile it to final data, and document lessons for future requests. While answering, discuss clarifying the decision and deadline, assessing available data, stating limitations, using transparent assumptions, producing a directional view, validating critical inputs, and following up with a refined analysis. Question 20. Why are you interested in a PwC Corporate FP&A Managed Services Senior Associate role? I am interested because the role combines practical FP&A, client interaction, and continuous process improvement. I enjoy turning imperfect data into clear insights, but I also value building repeatable processes, coaching team members, and improving control quality. A PwC managed services environment would expose me to different operating models while requiring consistent professional standards and commercial awareness. At senior associate level, I would bring strong execution, thoughtful challenge, and dependable communication, while continuing to develop as a client-facing finance leader. Be sure to connect FP&A expertise, client service, team leadership, process improvement, analytical judgment, PwC's professional environment, and motivation to deliver scalable, high-quality finance solutions. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.